place, and experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy, place, and experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Well, there you have it. We are live. Thank you for tuning in once again to another edition of Next.io's Weekly News with me, Conor Mulhare. And of course, in the pink corner, my one and only unique co-host, the owner of the 10 in 5, legend of the sector, and the best newsreader in the whole industry, Mr. Nico Jansen. Nico, thank you for joining me. How are you?
Yeah, first of all, thank you for having me. And by this intro, usually, I can just disappoint people, which I usually don't do. But, you're just raising the bar, putting me on the hot seat. So first of all, shout out and thank you. And hopefully you are good as well. How are you, mate?
I'm very well, thank you. And you could never disappoint our viewers, Nico. You know you couldn't. You're a living legend. Before we really get into it, let me say first and foremost, thank you to Placent for sponsoring this episode and keeping us coming back every week, because we couldn't do it without your support. But yeah, we're going to get into some pretty big stories this week, Nico. I know you've got your 10 in 5 lined up for the biggest headlines. We've also got quite a big discussion to have about Endeavour, which has agreed to basically one of the biggest ever private equity sponsored public to private transactions ever to occur. So there's a huge story around this. Endeavour's going to delist from the New York Stock Exchange and go private. But first, I think we should do the honourable thing and give the people what they want, Nico. I think it's
wait. Hold your horses. Hold your horses. Before I start with the 10 and 5, first of all, shout out to my man, John Gordon, who I ran into because last week I was in Dubai, and not in the city center of Dubai. It was roughly 35 kilometers out of Dubai at Mira 2, which is, a gated community. And I was just, entering a Starbucks. All of a sudden, I was like, hey, I know that guy. And then I was like directly running into the living legend, the CEO and founder of Incentive Games, John Gordon. And shout out to you, my man. It's always good running into you. And we had a lot of fun. It was a nice discussion we actually had. And you can run, but you cannot hide. This is the one thing I want to shout out to each and everybody. If I want to, the German will always find you. So
I don't know what you mean by that.
Just initiating the fire a little bit, as all of you missed me last week, but now I'm back in the best possible way.
Nico, we're back in business. We're very pleased to have you here. So, shall we get ready for yet another edition of the 10 in 5? Are you ready?
Yes, I'm ready. I'm ready to perform. Right. Thank you. So,
everybody strap in.
Thailand approaches the final step towards a casino legislation. The Galaxy Entertainment Group and MGM Resorts International have been studying potential opening of casino resorts in Thailand as a hedge against uncertain prospect in Macau. A study found that Thailand can lift tourism revenue by about $12 billion by legalizing casinos and housing them within large entertainment complexes. So Thailand is on the move, and we might see another state in Asia becoming legalized as well. Then things will change in the UK as Kaizen and BV Group partner to launch Betano as a new UK challenger. Entering the UK, Kaizen has appointed BV Group, the operating company of BetVictor, to supply its proprietary technology system for Betano to establish itself as a new challenger. And prior to today's announcement, which is just the breaking news, news broke that Betano had finalized a £40 million deal to become the shirt sponsor of Aston Villa FC, breaking the Premier League club's commercial records. So, welcome to the game, Betano. As of now in Germany, you are providing the top-notch technology, and we can't, or we're just waiting for you to take over the UKL and challenge the Bet365. So, fingers crossed, it will be a lot of fun. Gaming investors have choice words for Bally's board and buyout offer. In an open letter to the board of directors, K&F Growth Capital co-CIOs Dan Fetters and Edward King ripped apart the proposed buyout. Bally's trades with clear intrinsic undervaluation compared to its potential, and equally, this undervaluation is for an obvious reason. The market has lost confidence in the company's current strategy and financial stability, the letter note. So, things might get ugly at Bally's. As already announced a couple of weeks ago, March Madness drove New York to $539 million weekly betting handle. The New York State Gaming Commission reported a $539.6 million online sports wagering handle for the week ending March 24, the second highest weekly handle in state history. The record stands at $572.6 million for the week ending January 22nd, 2022. So, as said, we're just waiting for the final numbers of March, but it is way bigger than February. Now, still back to Asia, as Macau released March 2024 gaming figures with a revenue up 52%. And we're speaking about revenue, not handle, revenue, noted at 2.42 billion US dollar. So the gross monthly income for March was recorded at 19.5 billion Macanese Pataka, which is equal to 2.43 billion US dollar, an increase of 53% from the year prior and a 5.5 boost from the month before. As the cumulative gross income for this year so far, the amount totals to 7.11 billion US dollars. As said, this is not the handle, this is the revenue. So crazy numbers we're seeing in Macau. Another kind of interesting upcoming market is Brazil, and DraftKings MGM set sights on Brazil's lucrative online gambling market. US sports betting giant DraftKings is among over 130 companies that have expressed interest in obtaining a Brazilian license, according to the country's finance ministry. MGM and Hard Rock International, owned by Florida's Seminole tribe, are also part of this cohort, with the total gross gaming revenues expected to reach nearly $5 billion within 5 years. Multinational firms like Bet365, Entain, and Betfair have already made significant inroads. So, Brazil will be quite interesting to watch. The Senate committee approves Mississippi online sports betting bill. A proposal advancing Mississippi online sports betting has passed its final Senate committee, positioning it for potential advancements to a floor vote. The Senate has until April 11th to conduct a floor vote on the bill. GDP of Mississippi is 146 billion, and it is as big as Morocco, just to give you some numbers here. Then a state which we will not see this year as online sports betting bill bite the dust in Georgia legislature. Georgia lawmakers failed to pass a pair of sports betting measures before the end of the state's legislative session. Now Georgia will have to wait until next year's legislative session to potentially create an additional revenue stream. 2 more to go as the Dominican Republic issues new online gambling regulation. The Ministry of Finance of the Dominican Republic has published a new resolution regulating casinos and online gambling authorization. The text established the requirements, administrative fees, and minimum criteria that operators must comply with to obtain a license, and each license will be valid for 5 years and not transferable during the first 3 years. And last but not least, Curaçao extends licensing deadline amid low quality applications. The Curaçao Gaming Control Board, short GCB, highlighted that some applicants have encountered logistical difficulties ahead of the original deadline, which required existing sub-licensees who wish to continue to operate in Curaçao's market to register by 31st March. With the aim of facilitating a smoother transition, the deadline for application submissions has now been extended to the 30th of April. And this has been my 10 and 5.
Well, there you go. Well done, Nico. And thank you very much. There is literally never a dull moment in this industry. There's so much news going on. And of course, our viewers can keep up to date with all of those stories and more by visiting next.io today. So I would recommend you do that. Now, after all those little stories, we've got one big one that we want to talk about today, Nico, and that is all about Endeavour. Now, it's a kind of interesting business when you're always focused on the betting and gaming sectors. It's kind of a slightly adjacent business, although it does, of course, have a pretty significant betting component to it in the form of OpenBet and IMG Arena, which are both kind of betting endemic subsidiaries, I would say, of the company. But for anyone who doesn't know, Endeavour is a huge sports and entertainment conglomerate. It's the majority owner of the UFC and WWE wrestling, several other sports leagues and organizations. It also offers artist and brand representation, which I believe is where it started as a kind of artists agency. But today it also has a marketing agency, analytics services, content creation, content licensing, a live streaming platform. It does live events. It does a bit of everything. So it's basically a huge multi-billion-dollar sports and entertainment conglomerate. And it's agreed with its largest shareholder. It's a private equity firm called Silver Lake. The two businesses have agreed to take Endeavour private off the New York Stock Exchange. Now, it depends which of the figures you look at, but there's a few different valuation figures floating around. So it values Endeavour, the deal values Endeavour at about $8.2 billion, or a $13 billion equity valuation, including its debts. And then including its majority stake in a company called TKO Holdings, which is the actual owner of UFC and WWE. The resulting private entity after this deal is said to have a total enterprise value of about $25 billion. Now, I don't want to get too bogged down in the numbers, Nico, but the point is, it's mega. It's a huge company, huge deal. They said it's the largest ever private equity sponsored public to private transaction undertaken in the media and entertainment sector. So there you go. So it's not going to couple of points. One, it's not going to go to a shareholder vote for the minority shareholders because Silver Lake already controls something like 71% of Endeavour's voting rights. Together with Endeavour's management team, they control something like 90 or 95% of the voting rights. So they don't need to put it to any kind of a public vote. It's pretty much guaranteed to go ahead, I think, pending whatever regulatory hurdles they might have to jump. But yeah, why is this relevant in the sports betting and online gambling sector? Is obviously because in 2022, Endeavour acquired OpenBet, which was the sports betting technology segment of Light & Wonder, or at the time, perhaps it was still called Scientific Games, for $800 million. And then that was subsequently integrated with IMG Arena. And then both of those companies came together under the OpenBet brand last year. I feel like I'm doing so much talking. Am I making sense, Nico? Is this a reasonable assessment of what the business is and what's going on?
Indeed it is. Indeed it is. But just to pick up each and everybody, in terms of, because I will just come up with a story of Novi, the Canadian payment solution provider, and they are all, first of all, an IPO company, so a stock listed company. And they will also go private. And just to pick up each and everybody where you're standing as of now, just, why should you actually take a stock listed company back to being private? It's pretty simple. First of all, always remember, we are seeing all these activist investors like at Entain. If you're a stock listed company, each and everybody can buy shares. So you don't know who's actually sneaking into your bed and for what reasons. Especially with green mailing and these activist investors, they just want to have a seat at the table, which we have seen at Entain. Disney has been faced this one as well, and it has been taken to a shareholders vote, which had denied this activist investors actually taking a seat at the board. So this is the first thing. As soon as you're private again, you control who is buying the shares. So it will not happen that somebody actually sneaks into your bed. Second thing is, as soon as your stock listed, you have huge obligations and requirements to report a lot of data across all departments, each and everywhere in the company. So if Enron and the bankruptcy of Enron does not yet ring a bell, look it up. It's always worth reading. And if I'm not mistaken, there's also a documentary about this. So things have changed significantly after Enron just played the kind of publicly listed game to its fullest. So these are also the requirements as soon as you're private, as you've gone private. So these obligations are not needed anymore. Usually it's a must. So that's the second reason of why companies actually go private. This also frees up a significant amount of time of your leaders, of your C-levels, and of your board, and they can focus or keep the focus back on business. By going private, which a lot of private equity companies actually advise their companies to do, you can IPO later on at any stage. But first of all, you just have way more silence to operate your business and to get the business back up and rolling. And as said, with a time span of usually 4 to 6 years, these companies are then going public again to actually just get some more money inside. And these are just the three significant kind of reasons of why to actually get a publicly traded company back to private. As said, this was just a little bit of the insights from my end to answer some of the bubbles which might be flying around your head as of now.
Yeah, good one, Nico. Thank you for those explanations. Actually, it's curious because Ari Emanuel, who's the CEO of Endeavour, didn't mention any of those reasons when he explained why he wants to take the company private again. The main point that he made, although I'm sure all of those things played a factor as well, but the main thing that he mentioned was a disconnect between Endeavour's public market value and what he sees as the intrinsic value of its assets. And obviously, Silver Lake is happy to agree with that because it's being taken private at a significant premium to its previous price. So it's going to be taken private at $27.50 a share, which is a 55% premium on the closing price of $17.72, which was the price before this discussion began in October. So obviously there's a belief that the markets have failed to appropriately evaluate the business, basically, and that, yeah, the CEO believes that it's worth much more than what investors have given it. So Ari Emanuel said, "We believe this transaction will maximize value for all of Endeavour's public stockholders and are excited to continue to unlock and invest in the growth opportunities ahead as a private company." Now, Nico, one of the similar stories that you mentioned, again, just from the last couple of days, another multi-billion-dollar company removing itself from the public markets and going private again, which is Nuvei. But I'm curious, you mentioned this kind of 4 to 6 year timescale where these companies get taken off the stock market and then end up being put back on. Is that what you predict is going to happen in one or both of these cases? And what's the kind of plan in that case? Do you use this time and the quiet period that you mentioned, and the kind of those lessened responsibilities in terms of reporting and all that, and you use that extra time and resource to really refocus the business and generate more revenue, and then come back on at a much higher valuation 5-6 years down the line?
Exactly. And just we have also empirical data for this one. Just remember evolution. As soon as the first short selling report actually, hit the news, out of a sudden, if I'm not mistaken, their overall market capitalization went down at least more than 20%. And this just puts a lot of pressure on each and everybody's business, right? You always have the sort of Damocles around your head as soon as bad news actually hit the international news. And this also gives some silence into the overall companies. And then you will just be able to focus on actually, getting all the power back on the road. As said, you can always take a company back to public, IPOing, or actually, even change the place where your stocks are traded. Remember Better Collective, if I'm not mistaken. They went. They did go public in Nasdaq as well. They have been stock listed in Sweden, and now they are stock listed in the Nasdaq. As said, this on the one hand, this can give you a lot of exposure. On the other hand, it doesn't get quiet as soon as you're stock listed. And as said, just to get some more silence into the business, focusing on each and every, or just focusing on the business solely, then you just take a company private. And as already mentioned by the CEO as well, if, of course, he has the understanding of, as of now, it's not, so the stock price is not represented what we see as the internal value of the company. And this, as said, just gives you a little bit of silence.
Yeah, absolutely. Well, we're going to tie this story together and have a look at the kind of broader context that it's happening in. It's been a bit of a coincidence this week to see both of those businesses just in the last couple of days announce that they're going to remove themselves from the stock markets. And we're going to look a little bit more closely at that context in just a minute. But first, Nico, I think we have a very short commercial video to play.
Hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Well, there you have it, and thanks to Hub 88 for supporting us. Now, we've been talking about delisting from the stock market and all that kind of thing. Now, it's something that I think the conversation around this has been picking up in the last few months, Nico. I think there's a lot of questions around whether the public markets have been adequately valuing businesses or not. A lot of business owners, just like Ari Emanuel, obviously feel that they're not getting the value they deserve. We've seen that in lots of different businesses over the last 6 or 12 months. And we've had some analysis from Peel Hunt, a London-based investment bank, about precisely this question. I would certainly recommend that viewers go and take a look at that article, because Peel Hunt has kind of predicted a bit of an exodus, especially from the London Stock Exchange, over the next few years. And this is a story that's really hit the headlines right across the mainstream media today as well. Because basically what Peel Hunt has said is that a significant number of companies might exit the London Stock Exchange over the next few years due to large buyers, be it in private equity or corporates or whatever, capitalizing on low business valuations. So Charles Hall, who's the head of research at Peel Hunt noted that there has been minimal IPO activity for the past 2 years. That's definitely true in our sector, Nico. We haven't seen almost any big gambling IPOs over the last couple of years. But he noted that he also noted that the number of businesses on the FTSE small cap index, and that's basically any smaller companies outside the top 350 firms on the FTSE, that's the FTSE 350. There are only 114 small cap businesses left on the FTSE, down from 160 in 2018 to 114 in 2023. And the headline that's hit the mainstream media today is that the small cap index will not exist by 2028 if this carries on. So why is this happening? Why is it so much more difficult now for small companies to remain publicly listed in London? And why are they choosing not to be listed anymore? So Peel Hunt noted that an extended period of capital flight, which is a term I'm sure you're familiar with, Nico, but I had to Google it. An extended period of capital flight has triggered significant shifts in the investment landscape, prompting a surge in mergers and acquisitions over the last year or two. So in Q1 2024, there have been 12 transactions exceeding £100 million announced in London, which continues momentum from last year. Lots of M&A going on because it's become an attractive option for potential buyers amid lower valuations. In addition, Nico, and this is something that you've already explained to us, management teams are increasingly questioning the benefits of remaining publicly listed, and boards are more inclined to entertain acquisition offers, as well as shareholders who are driven by performance and liquidity concerns are also more readily accepting buyout offers. And Peel Hunt said that it has been particularly noticeable in recent months that corporates were the main acquirers. So, and it also said it's been surprising to see relatively low activity from private equity given the circa $4 trillion of dry powder currently available. So, Nico, I come to you. What do you think has been driving all of this? Is it all about retail investors and consumer spend, or is it interest rates and the macroeconomic environment? A little bit of everything kind of pushing valuations down and making M&A more attractive to anyone with cash on hand?
Exactly. That's the thing. And just remember that as of now, you've just been speaking about the London Stock Exchange, right? So as of now, the big money and the big dogs are in the US. So while we see, as you mentioned, Sportradar doing their IPO in September 2021 with an evaluation of $8 billion US dollars, I'm pretty sure Carsten Curl, we can take him off the list. We need to take care of it. And main shareholder of Sportradar. So shout out to him. So this was just when they IPO'd at 8 billion, if I'm not mistaken. They hit the double digits evaluation quite recently. So they are worth more than probably 12 billion US dollars. So the big money has shifted from Europe over to the US. We've seen William Hill being taken by 888 as first of all William Hill taken by Caesars, then resold to 888. So there you just see that a lot of the heavy investors are actually seeing the pie. They just want to grab something out of the pie and they take it to the US, as said, where the big investors, the private equity and M&A game is just played on a way larger scale than we know here in Europe.
Yeah, and of course the big one that you failed to mention is Flutter Entertainment, which got its dual listing in New York a few months ago and is now going to pursue a primary listing there. So if you remember at the time, that whole move was all about getting access to those deeper capital markets in the US and access to new domestic US investors. And I think that's something that's very attractive to lots of companies, as you say. So we had some more commentary from Neil Shah, who's director of research at Edison Group, and he kind of mentioned that it should be a concern for the UK government that so many companies are starting to look to the US for their primary listings. Flutter's departure followed a worrying trend of listed companies losing trust in the city, so he said. And this reminds me as well of another story that we had. My colleague Sonia Lindenberg spoke to a mystery CEO, an anonymous CEO of a publicly listed company, for a feature called Next Inside. If you go to next.io and search Next Inside, you will find it. And it's all that was a big interview all about the challenges, precisely the challenges that we were talking about earlier. And the question, Nico, I think it's a bit of a delicate balance. Ultimately, the question is, do the benefits outweigh the disadvantages of public listing? Because there's obviously two sides to every story, and maybe it's all about the timing. And unfortunately, right now, it's perhaps not the best time to be publicly listed, but it's not all doom and gloom. It never is. Every cloud has a silver lining, Nico.
Yeah.
So Peel Hunt, go on.
And there's always a little bit of light in every so dark tunnel, right?
Yeah, exactly. Yes, you're quite right. So, Peel Hunt said that this all sounds very negative, but the reverse scenario can happen and can happen quickly. It really needs a trigger to break the cycle. So increased fund inflows could be spurred by various factors, including policy changes, reduced ownership costs, and greater allocation by institutional investors, according to Peel Hunt. Obviously, the big thing, I think, is an improvement in the macroeconomic outlook. With lower inflation and lower interest rates could lead to enhanced economic activity and investor appetite. And then Charles Hall, was it Charles, said if we do see increased demand for UK equities, then valuations should improve materially, which would then make an IPO a more attractive option. So it looks like nothing in the immediate term, Nico. We're in a bit of a lull valuations wise. Lots of companies starting to think carefully about whether it's worth it to stay publicly listed. And obviously, as we have discussed today, Endeavour and its largest shareholder, Silver Lake, have decided not to do it. What more can you say about this one, Nico?
Yeah, so as you already mentioned, we have two companies actually, hitting the news with the big investment having taken place. As you already mentioned, it's Nuvei, so the Canadian payment solution providers. They have had an offer by Advent International, which is a private equity company with an evaluation of 6.3 billion US dollars. And the deal was announced on Monday. Funny enough, if you just take a look at the stock market price, and don't be afraid that, first of all, it's Canadian dollars, not US dollars. So you have to do a recalculation. So what I just told was 6.3 billion US dollars. So if you now just Google up Nuvei, make sure you're hitting the NASDAQ price and not the Canadian price. So first of all, this rumors already started flying around by mid of March. So if I'm not mistaken, 15th of March. So as we all know, information at stock exchanges, they expand significantly faster than anywhere else. So by the 15th of March, the overall price of one share of Nuvei was roughly 22 US dollars. And the premium the Advent International is about to pay was 56% higher, with 34 dollars per share. Of course, if you now look up the price today, it is roughly $32-33 per share. But as said, rumors started flying around by 15th of March, and this is when they initially offered the acquisition. This will change a little bit the landscape of the shareholders within Nuvei. So the Philip Fayer will retain his position as chairman and CEO of the group, as well as holding his 24% share equity. In addition to Fayer, Canadian shareholders, Novacap Management and CDPG will retain respective shareholding of 18 and 12%, which makes a total of 54% share held by existing shareholders, and Advent will take the remaining shares of 46%. So why is this important? As of now, the overall deal is just an all cash deal. So they will pay all cash, no equity, it's just all cash. And they will pay this amount of cash by just getting a minority share in Nuvei with 46%, which also indicates that even the private equity company, as of now, values this investment way higher, and that's why they're taking the minority share of 46%. And there's also an analysis statement which is stated as: we continue to believe that the combination of large markets with a secular tailwinds coupled with lower valuation suggests continued consolidation within the payment and fintech space. So as said, they already kind of freed up some cash back in the days, and they invested heavily, especially in South America. I'm speaking about Nuvei. And so for sure, within a time span of the next 4 to 6 years, we will see a comeback. And as already mentioned so often, Hollywood loves a comeback. And as Britney didn't do that well with her comeback, I'm pretty sure we have lined up some strong companies which will just bring a lot of joy to each and everybody of us.
Yeah, absolutely, Nico. Well, it's Endeavour and Nuvei this week. Let's see who it is next week. It seems like maybe there might be more of these kinds of deals to come. But thank you for helping me make some sense of these stories this week. It's been absolutely lovely to have your input and totally invaluable. So thank you once again. Thank you to Bogdan and everybody in the comments and everybody who's watching. Thank you, of course, to Hub 88 and Playson for supporting us. And Nico, once again, most importantly, thank you to you. Same time, same place next week. I'll see you here.
Love, a lot of love. And
Bye.
everybody stay healthy. Bye-bye.